weekend. Ira Epstein with your Spider ETF stock market wrap-up, and this wrap-up is for the week before the craziness begins, right? No, it's days before. Remember where we're at. This is Sunday now. We're on the 30th of March, one full trading day tomorrow, and then Howard Lutnick is supposed to turn into President Trump on April 1st, and it won't be a joke, whatever the tariffs are going to be, and then we're supposed to hear the announcement. Now, there's been a lot going on. On the way to Mar-a-Lago on Friday, the president said talks are going very well between he and Putin. Now today's Sunday, 48 hours have gone by. If he believes Putin is putting in any manner a way to stop the peace between Russia and Ukraine, and he's got to stop belittling Zelensky. I'm telling you, this is how fast things change. He is considering then putting a 25 to 50% tariff on all Russian oil. And if you trade with the United States, you will get hit with another 25 to 50% tariff. In other words, he's pissed. He's doing what he did to Venezuela. He's threatening Russia with it. So as you know, this is the art of negotiation. And while people think, oh, Putin and the president are buddy-buddy, don't you buy into that. The press is all over the board. They know as much as the man in the moon. I really believe that. The report on what they want to hear. Nobody except President Trump knows what's going on, including his cabinet, because he fires from the hip. And he wakes up in the middle of the night and he has a different opinion and things change again. So we'll see. The other thing you have to consider, he also said he wants to put these tariffs on and then he'll consider the removal of them. So country upon country has been making up to the president, trying to find ways to avoid these tariffs. It doesn't sound as though that's the game, but I want to be clear. That's how it sounds now. In 48 hours, it could be very different. So you're going to be left jumping and guessing all the way through. What about normal news? All right. What you're going to get is the Chicago PMI coming out Monday morning. And the last reading, they're looking for it at 45.4 versus the 45.5 they had just recently. So that would be for the February reading. This would be 45.5, the Fed number. The Dallas Federal Reserve is going to update their monthly regional manufacturing outlook for March. And in February, it was negative 8.3. We'll see if it went further negative or what it did. And when you take a look at what the markets have done, if you just look behind me, it was pretty much a sea of red. Why would you want to be a hero going into what you can't win? I don't know what the president's going to do. You don't know what he's going to do. You could get tariffs on April 2nd, removal on April 3rd. I think you want to hear what they are, where they're going into place, and that's where you're at. So you got to think, what do you do? Well, if you have to be in the market, you might want to be defensive. That's the first thing that you got to think about. Because when you look at how all this is going, I don't know how the month's going to end, but tomorrow's the last trading day of the month. I know AMC's down to 288. I told you it was going to be in big trouble, and I've done my job there. But I've had my heartache. I didn't think Home Depot was going to go down as deep as it did, and there's others in here that we can take a look at. By the way, I don't have clients in Home Depot. I just didn't think it was dropping there. So why not revisit? I looked at charts today of Darden, and then I looked at McDonald's. And I said, let's take a look at McDonald's and see what they've got, because we all look at it. And you talk defensive, it doesn't get more defensive than this. Where do you park your money? Number one, you can see how the market did have a nice rally, and it has had a pullback. It's not in a trend right now. You have a higher high and a lower low. That's the way to look at it. As for moving averages, the big support in the markets at the 18-week average at 297.70, which is not right here. It's a little bit lower than the market, about, in the neighborhood, $10 or so. So an area you got to think about right there. As for the resistance, it's proven itself. The upper Bollinger Band does a nice job at certain times. Now, here, the market ran it. This is called when it latches onto it. And by the way, this stock likes to do that. Look at how it latched on down here. Look at how it latched on down here and here. So certain stocks have a different characteristic than others. And we get the gorilla glue trade when you hit that Bollinger Band, you seem to like to run with it for a while in McDonald. So keep that in the back of your mind. It ran it a little bit here and it peaked out. Huge outside data to the downside. And now the market is just sort of what I'll call in a trading range, sideways action. When we look at momentum, the market had gotten overbought right at the time it was doing that, and it backed off. Then I think it's time that you relook at the CME group. Why? Volatility is going to go crazy now. And as volatility, it's there, and volume picks up, and it will, in my opinion, after the tariff announcement. This is probably, and they're probably doing it already, doing very well. And they're very creative. They've been coming out with many grain contracts. You could trade one Bitcoin now on the CME. So they're doing everything they can. They blew it years ago when ETFs came out, and I made a prediction. In fact, I spoke before the board years ago with Leo Malamed, and I said, when these ETFs come out, guys, you're going to lose a lot of business. I did my best to explain. I thought they should find a way to go in. They went into single stock futures, which never took off. It's the ETF business that took off, and I was right in it, wrong in it. I remember speaking there, and whatever, didn't do me any good. And this was many years ago when ETFs were just starting. You can see where we're at, how the market is coming up through here. Okay, higher lows, higher highs. By the way, if you don't know the name Leo Malamed, he was the big-time founder of the International Monetary Market at the Merck that became your S&P, your currencies and everything. And I love these people. I mean, I used to go out to lunches with them. I was a young guy, had a good-sized brokerage firm, one of the bigger ones, one of the very bigger ones. And these were just super bright men, and they were very approachable. That was the beauty of it. A great guy. Higher lows, higher highs. You can see how the markets are just sitting here, playing that game back and forth. In Netflix, it's neutral. You have a higher high, lower low that's stuck at the 18-day average. It hasn't gone anywhere. It's consolidating. I believe this is a stock that's going way up here over time. I think they won the war. I think if you're going to drop anything and keep anything, you want to own your Netflix. As much as the rest try to get together, like I got today, 4 months for Disney and Hulu, $2.95 a month, and then it goes to its regular. But nobody has as much as Netflix. That's the issue with it. If I had kids in the house, I'd probably go for that deal. But I don't have kids in the house, unless you call my little pussycats kids. I've got here higher lows, higher highs. So we're getting a correction out of China. You never did embed. You're overbought. I could see a little bit more of a correction happening here, especially as we find out what all these tariffs do. A big support comes in between the gray line, which is the 200-week average, to the 18-week. I don't think you're going to get that far down, but it'd be interesting to see. In Home Depot, well, as you can see, the market hasn't given us a bounce at all. It's just gone down and laid. Why do you think that is? Did you bother taking a look at what consumer confidence did on Friday? You saw all these numbers plunge. You saw the University of Michigan consumer confidence numbers all take off where they think inflation is going. So I happen to think as we're down here, I'm looking for a bottom to shape up. You're going to stay home. You're going to do some things to your house during the spring, summer. I think their business will pick up. So the consumer may not go out and buy those big steaks that he was, but he'll do this. And we did see the service industry do a little bit of backing off here. Uber, need I tell you how much I like Uber long term? Now, may I be entering it right and wrong at different points? Probably. Do I think this is basing action where the market wants to go higher? Yes. Do I think they win out in the end as autonomous driving just keeps picking up city by city slowly, but picking up, and eventually you're just going to want to go on to that Uber app to get it? I don't believe that GM or Tesla, what's the point in developing your own app for that? Put it in the ones that have it. Let them do the software upgrades and everything. You just make your money each time they rent one. It's a much better game. If you've ever developed software, I tried to convince people that we're doing it. It's called an endless bucket, and it is. And you'll saw that you've seen Schwab buy out firms to do this. I can tell you firm upon firm, there's very few software companies left that do charting, all right? There's just no money in it. Higher lows, higher highs. I can see where the market's fighting a battle here at the 18-day average, but it is in an uptrend. The market would have to get back in under 69.36 in order to not be good. But I think you're going to see long-term buyers come in here and say, I'm not going to play that game. I don't want the market maybe to get under this low or this low. I don't want to see the noise. I believe that that is the future, and that's the way I want to go with it. That's what I'm expecting to see. In KRE, which are the regional banks, down and away. Consumer confidence, no good, nobody's spending. You're going to go out and commit to doing a new business right now? I don't think so. Tell me how your business is going to operate. Where are you buying from? What are the tariffs on those goods? You don't know. This all comes home to roost until we know more. The industrial sector, same way. So it's very hard, if you think about it, to be bullish. And when you look at the chart action, you're seeing that story. So it's not just charts that are at work, it's the other part. Let things come out by Tuesday, then approach the market differently. Maybe you'll have an idea what's going to go on. In the energy sector, okay, so if Russian oil does get tariffed and Venezuelan oil gets tariffed, you do realize that's bullish, not bearish for the oil market, because more oil's off the market. Don't get me wrong. There'll be some countries that don't do business with the U.S. that do it. But do you think India is going to be buying Russian oil or Venezuelan if we say to them, hey, we're going to hit you with a 50% tariff? I don't think so. Same thing in other areas. By the way, the president also made a statement with Iran. It's time to start talking about this, or we have some very big bombs we might want to test out. Go read the news. You'll see it tonight. He is basically telling them, time to talk. In UUP, lower highs, lower lows, and as you could see, embedded reading, the dollar's still bearish. Why would it be bullish going into this? Nobody knows what anything's worth right now. Nobody knows if this is good. What I have been predicting and what the market is really telling you is that when you go into all this and you start putting tariffs on things, people stop buying. That hurts the dollar. What's the other thing Trump wants to do? He wants to get the dollar down in value. He's doing the things he wants. So as much as people go, oh, he's a wild man and blah, blah, he's getting done the things he wants. Gold is the safe haven candidate that people are buying at this point. And the copper market, look at that pretty big correction that you just had. It went to the Bollinger Band last week. Go look at my video. I said, I think the pros are taking money out. There's shipments of copper coming to the U.S. You take advantage of that play. We don't know if copper's in the tariff mix. And now you're here, and look at what happened, down 4%. So I think that game came to an end just now. Now, I'm going to be coming up with something for you, not tonight, but tomorrow. I'm going to have a very short sale where you can come in and get an introductory 1 month to my futures, my combo, my just the S&P videos, the whatever you want. Half off the introductory price. So it's going to run you about $3.50 to see what I do, where the actual buying and selling comes from. It'll come to you in an email tomorrow. So if you're on my mailing list, you're going to get it. That's how you got to come and get it. So you might want to go tonight, go to iraepstein.com, sign up for any of our free offers. Make sure you're on that list so that you get the offering from me. This does not apply to existing subscribers for anything that they're paying for. This is for new people or people that had been subscribers. It's a one-time event for you. I'm Ira. You have yourself a great day.